My name is Ishaq, and I have master's education in business administration. Okay, so I started uh, this stock market field, finance field from 2013. First, I work in my country stock exchange as a financial analyst from 2013 to 2015. In the 2016, I started trading in the forex market, and then 2017 I started trading in the binary options. So I have so much experience, more than 6 years, 6 to 7 years I have experience in this market, this financial market. So recently I started this teaching. Before I was not teaching any course, just I analyze some pictures and share with the members. And some of the members, they insist me that you can teach us, maybe it will be beneficial for us, so you can start the teaching. So that I think that, okay, because before I was teaching in a university, so I thought that yes, okay, I can teach the people about the binary truth, about the forex truth, that how they can study this education and how they can be benefited from this education. So I started. There are some rules of this study. The main mistake of the traders is that when they are trading in the binary option, they are totally applying the study of the forex market. And which study they are applying in the binary option, the same study, that's the main mistake. So you know that in the forex market, the expiry time is a big time. It's up to us when we want to close the entry. We are flexible with the expiry time. But in the binary option, we once select the expiry time, we cannot change. We have short expiry time, like 1 minute, 5 minute, 15 minute, so on. So before opening any option, before placing any trade, we must decide for what time we are purchasing this option, for 1 minute or 5 minute or 15 minutes. So that is the main difference with the forex market and the binary option. So all the concepts are based on the long expiry time in the forex market, and all the study on the YouTube and those mentors they are providing, all the study is related to the forex market, you will find on the internet, on the YouTube. But they don't convert this study like a short expiry time. That's the main problem. That's why our result in the binary option is 50-50. Sometimes 50-50, sometimes less, sometimes 80, sometimes 70. It's not going up to the mark. So sometimes 70, sometimes 80, these results are coming. So these are not acceptable results when there are so much fluctuation in the results. Why this is happening? Because we don't know how to apply all the forex concept with short expiry time. So we will convert all the concept, all the forex concept into binary option. Then we can trade like 1 minute, 5 minute or 15 minute, as much you like. So we will study all the forex concept because that is a study of the market, of the financial market. But how we can apply this study in a binary option, that's the main thing. Okay, 1 minute after Azan, I will continue. There is Azan in my country. Yes, brothers. So I will show you some concept of the forex market which we are using in the binary option. They are very, very beneficial. So first, we must understand why we are using the candlesticks. These candlesticks, this price action, why we are using, because there is a line chart also. So I show you the line chart. You all the people join the beginners course. That's why I'm starting from the beginners. Is it good? Because I thought that from the beginning of the this process is very good for you people.
Yes, sir. Yes, sir. This is good for.
Okay, okay. So we are talking about the price and time frame. Price and time frame. Why time frame is very important? Why price is important in the forex market? So you know that price is moving from here to here. It's moving and it's creating up and down moves. It's not moving like a straight way, like in this formation or this formation or this formation. Now, every time it's when the price is moving, it's making a up and downs. Okay, so we are going to the up and downs after understanding the price and time frame. So this line is showing the movement. So movement from one level to another level, this is a movement. When you see the price is moving, it means time is running with the price. When price move in any direction, also time is running. And when I'm speaking, it means the seconds are running, time is passing. So when we are talking about the time frame, when we are selecting the 1 minute, 5 minute, 15 minute, 30 minute or 1 hour, so what's the meaning of the 1 minute and 5 minute when we are talking about the time frame? That the meaning is that the price movement, if that is a 1 minute from here to here, price started from here, goes down, again goes up and makes up and downs, and at the end of the 1 minute 59 second, at the end of the 59 second, price stops here. When price stops here, it shows the price action. What it shows? It shows the price action. From this area to this area, it covers the distance. It goes down, goes up. But in this line chart, we are unable to take any decision that we can buy here or we can sell here. Yes, in this line chart, we can see the price is going down. It means we can go down. Price is going up, we can go up. But this information is not enough. That's why we are using the another way. That way is a candlesticks. So candlestick, it means we must understand the market. We must get the message from the market, that what message market is delivering to us. It's very important. So this relation from the price and the time is that when price moving in any direction, it covers the distance from the time start from here to here and close here. So in this time, 1 minute, price covers this distance. So that is the relation between the price and the time frame. When we are talking about the 1 minute with the price, so this 1 minute price action, we say action is a time and price is a movement of a value. That is a value of a particular stock. That is a Euro USD. That is a currency. That is a pair in the forex market. In the 1 minute, it moves from here to here and closed here. So we can take decision from this 1 minute movement. What will be the next movement? Is it, again it will goes down or an up. So when we are talking about the price, there is the another concept coming. Which concept is that? That is a movement. So movement is what? Movement, it shows that price start from here and close here. It create a direction. So movement is a direction. And direction is what? Direction is a train. So when we are talking about the trend is uptrend, our trend is downtrend, our trend is ranging. So this price when run then moves from one place to another place, a value to another value, it creates a movement. That movement is a direction, as that direction is a trend. So we can consider this type of trend. If market moving down, we can say downtrend. If market moving in range, we can say that is ranging. If market is moving in up direction, we can say uptrend. But that is a line chart. Still, we are not able to take any decisions. We must get a complete message that we can understand that decision will be good decision for us, because we investing money. That is a very, very big decision. The money is hard earned money. We don't want to lose the money. So that taking the decision is very important. These decisions are very important to earn the money. So in this line chart, we are unable to take any good decision. So we will move turn to the candlesticks. These candlesticks are very important. This candlestick is showing the message. I will show you some slides about the candlestick, that how they are showing us a message and how we can take the decision. Look at this slide. This slide shows an action of the price. It means the candlestick are what? The candlestick are price action. So price move from here to here and create this body, this picture. This is the picture of the price movement. So that's why we are calling that these candlesticks are the price action. In this case, the price opens here. In the few seconds, price goes down, again pushed back. When pushed back, it goes up. When the price is above from the open price, it covers the distance. It means it's creating a movement. It's creating a trend. So it's going up. The price goes so much high. This is a high, but it's rejected and closed here. So in this cycle, we found so many things. Which are these things? Those things are very important. The open of the price, the low of the price, the close of the price, the high of the price, the body of the price, how much distance covered in 1 minute time frame. If the candle is the 5 minute, we can say the 5 minute time frame. So if the price covers the distance in upward and closed above the opening price, it's create a green body. It's create a positive change in the market. Positive change is an upward change. So this body shows the bullish, the bulls are in the power. The bias, when the bias, there are two parties in the market. One party is the bias party. They always buy. They create a demand. And there is another party which always sells. They always supply the equity. So these sellers always supply. Sellers' work is supply. The buyer's work is creating a demand, buy. So these two shapes showing as a demand and supply. So that is a demand. The market moving in upward, it's called a demand. So in this demand, we understand the price goes down. When it goes down, it means supply. The supply goes down. But supply is not enough. Again, demand creates, it goes up. So demand again in the power. It controls the supply. So demand is more than, it means the demand is more than the supply. So demand is increasing, the price is moving in up direction. If you just to consider in your real life, when you go to the market, if there are only 10 quantities available in the market in any shop, and all the other shop, they have no quantity of this product, but the buyers are more than 10. So the price of the product will be increased because the demand is increasing. If the buyers are 25 and only quantity is 10, so this $100 product, the seller will sell you at the high price. It means the seller is analyzing that there is so much demand. If I sold this price into $150, the buyers will buy because there is no other supply. Only I have a supply and I can manage my own rate. I can manage my own value. So the buyers, if they have need, they can buy on the $150, $165, $185. It means the demand is increasing because buyers are agreed to buy on any type of price, any level, any value they want to buy. When the demand is increasing, the buyers want to buy on any level, any level. It means when price is moving in up direction, again buyer want to buy. So the remains buyer, again they will jump up and they can buy. They can say that this is a good price. It means the demand is increasing, the price can goes up, goes up, goes up. So that is a demand rule, that when the quantity is very less, the supply is very less, the price will move in up direction. And when the supply is so much, then the demand. If the demand is 10 and supply is 50, so what's the reaction? The price will drop. Sellers will want to sell on any low price because sellers don't want to make a loss. He say if the price is falling down, maybe again price goes down, maybe again price goes down, it's better to I sell here to book some loss. It's better to I sell here to book some loss. It's better to sell here to book some loss. That is a concept in the Forex market. If you have a motorbike, any bike you have, in the market, the same product is so much in quantity and you want to sell, your product will be sold out at the very, very least price because there are so many products available in the market of your quantity, of your product quantity. When if you have a bike, this is a unique bike. There is no quantity in the market. It's up to you how much you want to sell. But if the quantity is so much, then you cannot decide your price. So that's you must understand in the market, what is the demand, what is the supply, how the supply creating, how the demand is creating. That is very, very important. I will teach you from the bottom to the top that how the demand creating, how to understand the demand and how demand is dimensioning and how supply is starting, how supply is increasing, what the process they are doing for the supply and the demand, and how we can analyze in each and every candle that where is the demand is a greater or the supply is a greater, and which are the areas where the demand and supply is seeking for the buyers and sellers. So all the things I will tell you in this course, but that is just basic to give you understanding about the candles. Then I will continue more. So in this case, in this candles, I found so many informations. The information is the open, the low, close, high, and the body. It's helping me to taking a decision. In this little candle, that is a candlestick, it looks like a shape like a candlestick. You saw the candlestick. So this candlestick gave me idea that there is an open in this period, price goes down, yes, but there is a demand is greater, it goes up, it creates a new high. Yes, here the price is rejecting, it means there is some supply here, that's why the price is decreasing. The price is closed here in this period, I can understand, yes, the price moves in up direction. Maybe there are chances the price can move more in up direction, yes. But in the single candlestick, still we are unable to take any decision. So we must need more thing. We must need more study. In this candle, all the things are same. The concepts are different. As we are talking about the buyers and the sellers, that buyer's habit is always push the price in up direction and seller habit is that always push the price in down direction. When they always push the price in down direction, it means the price open from the upside and close at the bottom from the downside. In the buyers, the price open in the bottom side and closed as in the up direction. So that is the main difference. Look at this difference is very important difference. You must understand this difference. The high, the low is the same, but the open and close is a different, and the color is a different. Why the color is red? Because the price down. Price is a negative here. Here price is a positive. From the open, here the price is negative from the open. So that's the difference. So in this, we can analyze the high, low, close, and open information from the candles. And these candles suggesting the another very, very important point, which is that is the rejection. When the price rejects, it shows a strength and weakness. This rejection is showing the strength and weakness. So we must understand which rejection is from the buyer side and which rejection is from the seller side. The candle is getting weakening, our candle is getting strong. That information is very important. I will teach you all the rejection of the candles, how we can analyze the rejection, how we can put the rejection understanding in our tradings. So all the things will be covered in this course about the rejection. So that was the basic about the candlestick. So there are some ranges. I divided these candlestick into ranges. These ranges are very important to taking the decision. So these decisions are very important. So these ranges, why I create these ranges? The ranges are very important to analyze the strength of the candle. When we are confirmed the strength of the candle, we can make a decision. So in this ranges, we must understand and we can create a probability. The probability of the candlesticks, that if this candle appear, the how much probability is to the next candlestick will goes up. Just an idea, but it's not a last decision. There are so much other concept we must understand in this course. So we are going to the candlestick ranges. We must understand the meaning of the candlestick. If the candlestick appear like these type, no wick, the short wick from the bottom, the longer wick, the longer body from the bottom, it shows the strong bullishness. It means bullish is what? The bullish is the power. The bullish is the strength for the buyers. And it's showing that there is a strength in this price movement. That is a 1 minute or 5 minute or whatever you time frame consider. That is a candle. So is this candle, there is no rejection from the bottom, from the upper side. It means it's a very, very strong. That candle have a rejection from the buyer side. So buyers push the price up direction. It's the strength of the buyers. The buyer's rejection is the strength of the buyers. So these prices are the what? These are the strong prices. There are 80% chances if these type of candles appear, the next candlestick can goes up. So there is just a probability. It's not a last decision. Must understand. Only I'm taking the decision on the candlestick ranges. So if this type of candlestick appear in the chart, there are 80% chances the market can goes up. Maybe some other factor can affect the decision. Yes, but we must just looking at the ranges. So that I'm taking the decision from the ranges. I'm not taking any other concept. So this strong bullishness suggests me that 80% chances the market can goes up. So in this bullish candle, there is no strong in this candle, just a bullish candle. Why there's just a bullish candle? Because there is a rejection from the upper side, also rejection from the lower side. The rejection from the buyers and the sellers is strong, but body is very weak. The rejection from the upper side is very strong, but the body is equal to the rejection, and there is a lower rejection also. So these are the things, but the color is green. It's showing the strength, but that is the only bullish candle. So there are 70% chances if these type of candlestick appear that we can take the decision the market can goes up for the next minute. And now on the neutral phase, when I'm looking at the neutral phase, the body is getting so much weaker, and there are the wicks from the upper side, from the lower side. Sometimes the wick is upper side and lower side is equal to each other, greater to the body, and sometimes the upper wick is greater, body is smaller, and lower rejection is lesser than the body. So these type of candles when appear, these are the neutral candles. The neutral candles, the probability is 50-50. What the probability? The probability is 50-50. It means 50% chances market can continue and 50% chances market can decrease. So on this less bullish, when there is no rejection from the buyers, there is no push from the buyers, only the rejection I saw from the sellers. That rejection is showing me that the sellers are in the power. The candle is the green, but the sellers are in the power because they push so much. As much the price moving 100%, the 70% they push is down. But at the end, the price closed in the green, so it's a less bullish. So there are so many less chances, these chances, like a 40% that after this candlestick, the next candlestick can goes up, but there are only 40% chances. So these are the ranges. The same ranges for the sellers. No difference. There is only one difference. It's very important to understand. When you see the rejection from the bottom, it's a buyer rejection. When you see in the green candle, the rejection from the bottom side, it means the buyers in a strength, because sellers tried, but buyers again pushed market in up direction and close is a green. So that is the strength of the buyers. So if the strength of the buyers is from the bottom, then the strength of the seller is from the upper side. So if you see the red candle from the upper rejection, there is no bias lower rejection. So that is the strength of the candle, the strength of the candle. It shows that the sellers are very much stronger. The same, if you see the rejection from the both sides, there it means that these are the bearish candle, not a strong bearish candle, only just a bearish candle. We can take decision. But in these cases, if you find the very small bearish body, but the rejection from the buyer side, because below the rejection is from the buyers, it's very strong. It's showing the less bearish power. So we can take decisions. These type of, there are so many millions shapes of the candlestick. Only just I consider these shapes. These are the ideas. Maybe the price, these shapes can be differ from the body, can be differ from the upper wick, lower wick, but you can consider these four ranges in the market. Always you will see all the candlestick will fall in these four ranges. So we can take the decision on the basis of the candlestick ranges. When I'm talking on the chart, I will ask from you people that this is a strong bullish candle because it's fall in the strong bullish candlestick ranges. So these are the ranges, okay. So there is the end question is arising. Why the price moving in up direction? Why the price moving in down direction? What's the reason? So when I'm talking in my classes, when I'm trading, always I'm saying that the price does not move without any reason. So there is maybe any reason, that's why price goes down. There is any reason the price goes up. So what are the reason? So this study is to analyze, to understand the reason why price moving in up direction, why price is moving in down direction. When the price is moving in up direction, suddenly why price is changing in down direction? What's the reason? So this study is the reason of the movement, of the price movement. I will clear you in this course all the reasons that why the price moving down, why the price moving up, how we can understand before opening the next candle that the price will goes down. How we can understand when the price is going down, suddenly it can change. But we know before the changing of the price. These are the techniques. The techniques of what? The techniques of the understanding the reason of the market. So here what we are doing, I'm talking, I'm giving you lesson and you are hearing, you are listening and you are getting my points. It means this is our communication. This communication give us a sense about what? About this market, because I'm talking, the market is in front of me and I'm talking on this market, these candlesticks. So you all know that I'm talking on the candlesticks, I'm talking on the price, I'm talking on the price actions, all the things. So when the buyers, so it means we are using this language. This is a language, the international language, English, and we are using this English language that we can get ideas. So when we are doing something, we are using communication. So when the buyers and sellers buy in the market, so if they are buying Is the buyers and sellers are using any communication? Yes. That communication is the candlestick. That is a language. This is the language. When buyers and sellers buying and selling in the market, they communicate with each other with the language of these candlesticks. They are very expert. They can understand. They are talking with this language, these candles. This price movement is a language. In this course, I will teach you this language, that when the price moving down, when the price moving up, when the price is changing the direction, before changing the direction, it gives a communication signal. It gives a signal that now I'm getting weak and I'm going to give opportunity to the another party. They can continue in downward or they can continue in upward. So that is the communication from the buyers and sellers in the shape of the candlesticks. And there are some other special candlestick also. These other special candlestick like dojis, these type of dojis in the market. These are the pillar of the market. These are the very, very important. So can we see, we are talking on the language that there are so many important things in the language. Without these important things, we cannot create a language. So that is the important points in the market. These are the special characters. The special characters give us a special information from the buyers and sellers. When the buyers and sellers talk to each other, they create these type of shapes. These shapes give us an education, information that what will be in the future. So everything is possible. There is no impossible. All the things are possible. We can understand the language of the buyers and sellers. And when we understand the language of the buyers and sellers, each and every move we can understand that what will be the next move, what will be the next move. To predicting the next candlestick is not a difficult job. It's easy if you understand the candlestick language. In this course, I will give you all the understanding about the candlestick language. So when we are using any communication language, we are using the words. Before making the words, we are using the letters. So each one candle is a letter. That is a letter. So these letters all together, when combined together, it's create a words. If the two candles or three candles combined together, it's create a word. The 3 to 4 words create a sentence. 3 to 4 sentences create a story. So the market chart is what? It's a story. That is a story, brother. All that is a story. The single is a word. The two candlestick is, the single is a letter. The two candlestick is a word. When this word, it creates the sentence. This sentence, this sentence, this sentence, this sentence create a story of the market. So we will understand this story. When we read the story, we can know that what is going on. It's very easy. Just the sincere, the honest people, if you give you the education, the correct education, the step by step, the line to line education, then everything is possible to understand. If any teacher or any mentor come and start from the zigzag topics, sometimes from talking on the support, sometimes talking on the candlestick, sometimes talking on the trend, sometimes no. All the study is designed. The first what you will learn, the second what you will learn, the third what you will learn. When the slowly, step by step, all the concept you will learn, then you can create a story, then you can make a story. If today we talk on the candlestick and tomorrow we are talking on the reversal, so you will never understand. So slowly, I will give you all the understanding of the market, that how we can read the market. The big thing is that how to read the market, that we can take the decision. So this is the game of the taking decision. If the decision is good, the decision is right, you can earn the money. If the decision is wrong, then you are losing. Always we will earn the money. It's very important. So in this course, now I'm going to the course, little bit introduction of the price movement I will give you. And now I'm going to show you the course topics, what are the topics and what we will learn in this course. So I will send you another meeting. This meeting, all the Zoom meeting is closed in the 40 minutes. So when the 40 minutes ends, I will send you another meeting. So this price action course we will learn. So it's not, I'm going to clear you some things. Only these topics are written in this course. It's not necessary that I will only teach you these topics. No, brother. I will teach you more education. Maybe so many other topics I will include it. When you will clear, when you will able to read the market, then I can think that now I done my job. So these are just written topics. Don't go to the written topics. I will add so many more information in it, and I will give you understanding how to trade, how to choose the entry point, how to place the trade for the 1 minute, for the 5 minute, for the 3 minute. All the things I will teach you in this course. These are just a written topic. Don't go to the written topics. So these are some topics you read already. These are all the topics I will teach you, but there are so many other topics I will teach you. And there is other thing. In this area, they're written that the course duration. The course duration is in written 10 days. Maybe we can complete in 12 days, in 13 days. Maybe we can complete in 9 days. It's up to you that how much you can participate with me. So time duration is not important. The important is what? The important thing is that you must able to trade in the profitable way. So my mission is that I can create the profitable traders. If you people participate with me, with all the lessons, when I give you assignment and you complete the assignment, then I will be happy and I will give you more information in this course. Okay, I'm sending you another meeting and join me again.